Let's go live now to Jo Masters. She's the Chief Economist at EY. Jo, good to see you. Let's perhaps start with an overall picture of the economy. We see the government in recent days announcing more stimulus, only about $4 billion worth. Is that going to be enough, and what is required in your view?
I think it's too early to know how much is going to be required. We know that economic growth in Australia is slowing. The rate of growth has halved in the last year. It's sitting at 1.4%, the lowest since 2009. But importantly as well, the growth base has narrowed. So in the first half of this year, growth was really driven by net exports and public spending, with private final demand going backwards. So we'll get the Q3 update in a couple of weeks, in early December. That will give us a really holistic read of how the economy's performed in Q3, where we did start to get some of that stimulus coming through from the rate cuts and also from the tax rebate. It is really encouraging, though, to see this infrastructure spend being brought forward, a bit of fresh spending, and also, of course, some of these announcements around productivity gains or just making business in Australia easier to do.
Jo, the Prime Minister and the Treasurer, for that matter, don't seem outwardly concerned about the state of the economy at the moment, but the fact that the Prime Minister yesterday brought forward $4 billion worth of infrastructure projects, that does seem like a fairly significant move, at least in my eyes it does anyway. So does that suggest that perhaps privately that they are concerned about where things are?
Look, I think there's always that balancing act. We know the economy is slowing. We have seen the RBA revise forecasts down. It does look, I would imagine, like the Treasury's own forecasts for economic growth and particularly for wages growth look a little bit on the high side. So we might see some revisions there in the mid-year economic and fiscal update, which we'll get sometime before Christmas, likely the week before Christmas. Growth is slower, looks a bit slower than they thought. Whether it's slow enough to hit the panic stations, though, I guess that's the piece that's unclear. And economics tells us that if you sort of pump a little bit of stimulus into the economy now, then you can shallow out that slowdown, and that's the important thing.
Well, stimulus to date, though, hasn't really worked, though, has it? Especially when it comes to those tax cuts.
Well, I don't know that I would say it hasn't worked. It hasn't worked either as quickly or as efficiently as we would expect. So when we look at those tax cuts, we typically look for about half of that to be spent. So far, it looks like we're seeing households pay down debt, but a little bit has been spent, maybe something like 25%. It's possible also that households are holding on to that money and will spend it going into the festive season. So I think it is really critical that we see a pickup in retail sales in December, and we'll be looking for that. But there's various ways you can stimulate your economy. The consumer's one part, and obviously this infrastructure spend and movements around red tape is an attempt to get investment going in the economy, and that has been a bit of a missing link, particularly outside of the mining sector.
Yeah, there's a lot of upcoming data which I'm sure will give you an indication. Obviously that bus is very happy to hear my question as well here this morning, Jo. Look, when it comes to at least house prices and what's happening in the auction clearance space, is that a sign, an early indicator that perhaps confidence is coming back a bit, or is that something else?
Look, it's really interesting. We've seen house prices turn around really quite rapidly in Sydney and Melbourne. That's not flowing through to consumer confidence, though. We're continuing to see consumer confidence fall. It's below its long-run average. It's been falling since we started cutting rates, including for those Australians that own a mortgage. And it's quite interesting, though, that we saw in the RBA's latest statement on monetary policy, they sort of talked about these rises in house prices as being positive. 2 in 3 Australians own a home. It will help through a wealth effect. Although I think it's not going to be enough to drive the economy forward, and in that sense we really do need this sort of infrastructure spending and some support for the consumer.